Nathan from Queens, video 3, April 8th, 2023. Trading plans. So, like I was saying in the last video, 2023 actually, this is the least amount of trading I've done in quite some time. I think I did more trading in 2019 than right now. So, I'm basically sitting on the sidelines. I have about 90% cash. It isn't like 2022. So 2022, last year, I didn't buy that many stocks. I wasn't buying too many calls either. I was doing 90 to 95% puts. I was buying each put. I was buying about between $2,000 and $3,000, and most of the puts that I was doing, I was making between 200. Actually, I wasn't even making 10%. I was making more than 10%. So most of my puts, I was making about $500 to $1,000 initially. Eventually, I changed, but 2022, it was like 95% puts. I wasn't buying too many stocks. I made probably less than 50 stock trades all year in 2022. It was mainly puts, a tiny bit of calls. So in 2023, since the market has been taken off, the Nasdaq is up about 20%. The S&P 500 is up about 8 or 9% since January 1st, all on bad news. And because it's a lot of strength with the bulls, I don't want to buy too many puts and get killed on puts, because I started losing on some puts. So I did buy some puts to start the year. I lost on some of those puts, but I could see the market's still rallying. So instead of doubling down, I don't double down. So when my plan and my trades are working, that's when I double down on the trade. I'm not a gambler here that, if I'm wrong, I buy more and buy more and buy more and lose more. So what I started doing is I started backing off a lot of puts. To start the year, I think I had like close to 10. No, maybe I had like 12 puts. And then as some expired, I didn't open up a lot of new puts. Like right now, I think I have 5 or 6 puts. I did puts on Roblox a couple of weeks ago. I did puts on AI 3 times in the last week and a half because it's rallied. I'm trying to buy puts only on companies that are worth nothing, are way overpriced. They're up like 10, 15, 20%, because you got to sell into the rally just like you got to short the rally. I'm short via puts. I'm not going to short the shares using the capital. I'm buying puts, but I'm actually buying calls in 2023. I was buying calls on stuff like Uber, on stuff like Bill. I actually bought shares of Uber, buying calls on stuff like ENPH, SEDG. I bought calls on RNG. So a company that is, growing 50, 60, 70, 80%. They just started making money. I was buying calls on stuff like Bill, BILL. I am trading shares, but I'm trading shares of cash kings or dividend kings, companies that have P ratios like 5, 6, 4, 8. Companies that are making tons of money and have the financials to give you a dividend so you could hold them. So like I was trading NYCB, NWBI, CRK, which I'm down on CRK right now. I was trading some of the banks like PacWest. This past week, I was trading SCHW, Charles Schwab. And I'm going to keep trading Charles Schwab because to me, based on the figures that we have right now, fair value on Charles Schwab is at least 60. But right now, the banks and Charles Schwab, because Charles Schwab has a lot of treasuries, has a lot of deposits, Charles Schwab is getting hit. So fair value is 60, at least 60. Right now, it's 48 and change. But I feel like it's a safe range for me to keep trading, watching the charts, and trade up to 55. I felt the same with CVS. So I've been trading a little bit of CVS. CVS, I think, is like $77 or $78 right now. CVS is a good long-term swing. So if I wanted to have CVS, I could see CVS to end the year at least like 85, 90. So if you feel like it's going to be 85 or 90, you can keep trading shares. Buy 500 shares because I'm doing 500 share lots. Just same thing with Charles Schwab. So I can buy 500 shares and keep trading it for like 50 cents or 75 cents. If I get stuck, if it goes down another 10%, I buy another 500 shares. So I buy 2 blocks. I haven't bought 2 blocks of Schwab or CVS, but companies like that are making cash, that have a P ratio under 10, that have dividends, they give you dividends 3-4%. Those are companies that if you want to buy blocks and the market, comes off, you're going to be fine, because it's going to be impossible to time the perfect top, impossible to time the perfect bottom. But just for you to know, so I was trading 500 shares of Charles Schwab a few times this week. So I did 1 for 60 cents, 2 for 50 cents. So what does that mean? I took 60 cents, 2 50 cents. That's $1.60, 500 shares. So it's not a ton of money. So I made like about $800, but safely. I made about $800 safely, and 500 times $48. So it's a little bit less than 25,000. I made 800 in a week. Yeah, it's a lot of money, but it's Charles Schwab. Charles Schwab at $40 to me is zero risk. Zero risk. Because you know what? Let's say you don't time the perfect bottom, because it's hard to time the perfect top and perfect bottom. So what? I get stuck in it. Charles Schwab falls to 42. Even 40, let's say. A year from now, if Charles Schwab is still 40 or 42, we got a lot of other problems to worry about, not Charles Schwab. If Charles Schwab was $40 a year from now, I'm not saying it's impossible, but let's say Charles Schwab is 40 a year from now, I can't even imagine the rest of the market. Don't even imagine the rest of the market. Definitely, if Charles Schwab is $40 a year from now, it's April 8th, 2023. If Charles Schwab is $40, April of 2024, that means the S&P 500 might be $3,000. 3,000. So not likely, possible, but Charles Schwab is going to be up eventually. And those are the companies that you could set it and forget it, like Warren Buffett. A company that keeps growing, keeps earning money, and if they want, they give you dividends. Same thing with like CVS. Right now, the market's not good. All right, we're in a bear market. I know the market keeps rallying, but we're going to have earnings coming out in 2 weeks. And for me, no FOMO here. So I'm going to still do puts, but not a lot of puts. I didn't do 2 or 3 puts a week. I'm doing like 1 or 2 puts a week, and only if I open one and close it. So I was still bidding on 1 other put. So 2 puts in a week, and that was it. And calls, maybe 1 or 2 calls, and I'm buying shares of companies that are making money, because I don't want to do a lot of risk right now. I feel the market's going to come off big time, and I hope in a few months from now that we're going to have a bull market that's backed up by data. If that doesn't happen, I'm going to hold off. If the market falls at least 5%, and the S&P 500 falls 5% in the same week, Monday through Friday, or 2 straight days about 4% on the S&P 500, or 10 trading days, the last 10 trading days, the S&P 500 was dead red. I don't mean red by a little bit, but red by a lot. That's conviction that the market is going to start turning south. When the market starts turning south, I'm going to pile on puts. But right now, we're like slowly going up on bad news. So I don't want to buy puts, because puts devalue over time. I want to buy puts when the market gives up the ghost and is ready to go down. If it doesn't go down, I want to see the S&P 500, the companies actually execute to be S&P at 4,000. Right now, based on the earnings that are coming out right now, S&P 500 fair value is 3,400. Good luck.